Welcome to the Deep Dive. We're the show that really tries to cut through the noise and get you the insights you need.
To be truly well informed.
Exactly. And today, wow, we are plunging right into the heart of this whole AI gold rush. I mean, you hear about it everywhere, right? The algorithms, the crazy innovation.
Inventing stuff.
Yeah. And of course, the chips. The AI chips that are just like performing unbelievably well. It's an electrifying time, no doubt.
It really is. And the speed of it all,
Yeah.
it's just staggering.
Yeah.
But, everyone's focus tends to be on the companies building the models, right?
Yeah.
Or maybe designing the hardware that grabs the
So
headlines.
these are the glamorous side.
Yeah, but there's this kind of paradox happening underneath it all.
And that's exactly what we're here to unpack today. Because what if I told you there's this, well, hidden giant, really, a company that's absolutely crucial, indispensable even, to every single major player in this AI revolution.
But one actually making the chips.
The one making the chips. And here's the paradox. It might just be dramatically undervalued by the market. We're talking about Taiwan Semiconductor Manufacturing Company, TSMC.
Yeah, TSMC. It's like they're providing the picks and shovels for this entire AI gold rush. But the valuation, it doesn't quite seem to match up with that central, almost monopolistic role they play.
So that's our mission for you today. We've gathered a stack of sources, research, articles, some really deep analysis, and we're going to pull out the most important bits to help you understand this whole situation.
We'll look at TSMC's core strengths, how they built this position.
Right, and how they literally power the entire AI ecosystem. Why their value seems, well, low compared to some of their big customers.
And crucially, the big risks, particularly the geopolitical stuff that hangs over them.
Think of this as your shortcut, your way to really get a handle on the company that's basically the backbone of this whole AI era. Okay, so let's dig in. Our sources are calling TSMC the Foundry King, the uncontested linchpin. I mean, those are strong words. How did one company get so dominant in making the world's most advanced chips?
Well, it really goes back to their unique business model. They call it pure play.
Pure play.
Yeah. So unlike, say, Intel or Samsung historically, who design and manufacture their own chips, TSMC only manufactures chips for other companies. They don't design their own stuff to sell.
Ah, okay. So if I'm Apple or NVIDIA or AMD, I can give TSMC my super secret chip design.
Your most sensitive IP.
Right. And I don't have to worry that TSMC is suddenly going to become my biggest competitor using my own tech.
Exactly. That's the core of it. This model builds just unparalleled trust. It lets these giants share their most valuable stuff without that fear.
That's huge.
It is. And it creates these incredibly high switching costs. I mean, think about it. If your super complex chip design is all tuned for TSMC's specific manufacturing processes, trying to move that design to a different foundry, it's a massive undertaking. We're talking multi-year, multi-billion-dollar effort. Huge technical risk.
So you basically get locked in a way.
Pretty much.
Yeah.
Companies just don't do it lightly. And this feeds into a powerful cycle for TSMC.
A virtuous cycle, you mean?
Yeah, exactly.
Yeah.
Trust brings in the big customers, right? Apple, NVIDIA.
The huge orders.
Huge orders mean predictable revenue streams. TSMC takes that money and just pours it back into massive R&D, massive capital spending on new factories, new tech.
Which then gives them the lead in the next generation of technology.
Which then attracts more customers or keeps the existing ones locked in for their next chip. It just keeps reinforcing itself.
Oh.
And, another angle is the sheer amount of data they get. Manufacturing chips for so many different companies, different designs, it lets them learn and refine their processes, improve their yields way faster than anyone else could.
Okay, so the trust is key. The cycle is powerful. But it's not just about trust. They actually have to be able to make the things, right, these incredibly advanced chips. What puts their technology so far ahead?
Yeah, that's the other side of the coin. It's their consistent, relentless leadership in bringing the newest, most advanced process nodes, think like the manufacturing recipe for smaller, faster transistors into high-volume production.
Like the really small stuff, the nanometers.
Exactly. Right now, they dominate 5-nanometer and 3-nanometer tech. I mean, projections show that those two alone could be like 60% of their total sales by next year.
60%.
Yeah. And if you look back at last year, the advanced stuff, 7 nanometers and smaller, that was already nearly 70% of their wafer revenue.
And they're not resting on their laurels, I assume?
Not a chance. The roadmap is just relentless. They're on track for 2-nanometer production late 2025, using totally new transistor designs, things called nanosheets.
Nanosheets! Sounds futuristic.
It is. And they're already planning beyond that. The Angstrom-era nodes, A16, with even more advanced power delivery built right in, they just keep pushing the physics.
Okay, but hold on. These modern AI chips, like the big GPUs,
Yeah.
they're not just one single piece of silicon anymore, are they? I read they're more like lots of little chiplets stuck together.
That's absolutely right. You're talking about systems in a package. And this is actually where TSMC has built a second, equally critical advantage: advanced packaging.
Okay.
Their own special tech called CoWoS chip-on-wafer-on-substrate. It's basically the gold standard in the industry for connecting the main logic chips to the essential high-bandwidth memory, or HBM.
Which is crucial for AI accelerators.
Absolutely critical. You need that super-fast connection between processing and memory.
And I heard that CoWoS capacity, that's like a major bottleneck for the whole AI industry right now. And only TSMC really has it at scale.
That's exactly what the sources say. It's a huge bottleneck, and TSMC controls it. NVIDIA's CEO, Jensen Huang, basically confirmed. It said, TSMC is the only partner who can deliver this CoWoS packaging at the scale they need.
Wow. So even if someone else theoretically could make a competing logic chip, they might still be stuck because they can't package it effectively with the memory without TSMC. It's like having a Ferrari engine but no chassis.
That is a perfect analogy.
Yeah.
It's another massive barrier to entry. So you see, it's not just a lead they have.
It's a widening gap.
It seems like it, yeah.
Oh.
Almost. Unbreachable, certainly for the next few years.
Okay, so if they're that far ahead, who's even trying to catch up? And how's that going for them?
Well, main competitors are Samsung Foundry and Intel Foundry Services.
Yeah.
Samsung. They've certainly been trying hard. They were actually first to introduce a new kind of transistor, gate-all-around, or GA.
Okay, a different design.
Yeah, potentially more efficient. But, and this is a big but, getting it to work reliably at massive scale with good yields, that's proven really, really tough for them. They've had persistent issues.
Which hurts their business.
Definitely. It's led to market share losses. They're down under 10% of the global foundry market now.
Okay, what about Intel? They made a big splash with their IDM 2.0 strategy, right? Opening up their factories.
They did. And it's super ambitious. They're aiming to reclaim tech leadership by 2025 and become a major foundry for other companies. But the challenges are immense.
Like what?
Well, for starters, their foundry division has been bleeding money. Staggering operating losses. We're talking billions recently. And maybe even more telling, Intel itself still relies on TSMC to make key parts of its own flagship processors.
Ouch. That kind of says it all, doesn't it?
It really underscores the mountain they have to climb. So you look at the numbers. TSMC had, almost 65% of the global foundry market late last year. It's close to a monopoly in the advanced stuff.
So, okay. Near monopoly, widening tech-led. You'd think the valuation would be through the roof. But that brings us back to the paradox, doesn't it? What's holding it back?
Exactly. The moat is huge, clear.
Yeah.
But the market sees them differently than, say, the companies they make chips for.
Right. So TSMC makes the best chips, powers everyone. But what does this mean for you, the listener, and this whole AI revolution? Our sources call them the agnostic arms dealer. What's that about?
It's a great term for them, actually. It means, this AI gold rush. TSMC isn't betting on one horse. They're not the prospector digging for gold themselves.
They're selling the picks and shovels.
Exactly. To everyone. They're strategically neutral, they serve all sides, and they benefit from the entire boom in AI computing, no matter which company or which chip design wins out in the end.
And they're definitely powering the giants.
Right.
NVIDIA, every single generation of their big data center, GPUs, A100, H100, the new B100, B200.
All TSMC. Exclusively. On the most advanced nodes, using that critical CoWoS packaging.
And AMD too, right? Their comeback story.
Absolutely. AMD's resurgence, both in CPUs challenging Intel and with their Instinct AI GPUs challenging NVIDIA, that's been almost entirely enabled by their partnership with TSMC. Getting access to that leading-edge manufacturing let them compete on performance and efficiency.
Okay, but hang on. The AI chip market isn't just GPUs anymore, is it? There's this big trend. The hyperscalers, the Googles, the Amazons, they're designing their own custom chips now, ASICs.
You're absolutely right. And this is actually another massive wave of demand washing over TSMC. It's not a threat. It's more business.
So like Google's TPUs?
Yep. Google's tensor processing units, Amazon's Trainium and Inferentia chips. AWS is actually one of TSMC's top 10 customers now.
Wow.
Microsoft's got their Maya chip, Meta has MTIA, all made by TSMC. So this rise of custom chips, these ASICs, it actually diversifies TSMC's customer base, makes them less reliant on any one company like Apple or NVIDIA.
Which could even give them more pricing power down the line.
Potentially, yeah.
And then there's that huge news about OpenAI, the ChatGPT folks. They're working with Broadcom on their own custom AI chip, an XPU.
Yes. That's a massive deal. Reportedly a $10 billion plus order. And guess who's going to make it?
Let me guess, TSMC.
TSMC. On their 3-nanometer process starting around 2026. It's a powerful proof. Even the absolute leading-edge AI software company needs TSMC to build its own custom hardware. Hardware independence relies on TSMC.
So for TSMC, this whole debate, GPUs versus custom ASICs, who's going to win? It doesn't really matter.
Strategically irrelevant for them. They make both. They profit whichever way the market tilts, whether a company buys NVIDIA GPUs made by TSMC or builds its own ASIC made by TSMC.
The money flows back to Taiwan. It really is the ultimate toll road for the AI era. You got to pay the toll to play the game.
That's the thesis. And TSMC's own forecasts kind of back this up. They're projecting something like a 45% compound annual growth rate, CAGR, for their revenue just from GPUs, ASICs, and server CPUs combined between now and 2029.
45% CAGR. That's huge growth.
It's massive.
Okay. So let's pivot to the money side now, because this is where that valuation paradox really hits you. TSMC is essential dominant, yet its market valuation seems weirdly low compared to some customers. Let's use Broadcom as the example our sources highlight. Why is Broadcom valued so much higher?
Yeah, Broadcom's rise has been meteoric, hasn't it? Hitting like a $1.6 trillion market cap. It's really been driven by a smart two-pronged strategy under their CEO, Hock Tan.
Okay, what are the prongs?
Prong one, they've positioned themselves as a top partner for those hyperscalers building custom AI silicon. They bring a ton of valuable IP in networking connectivity.
So they help Google, Meta design their chips.
Exactly, and they landed that huge OpenAI deal we just mentioned, so
Yep.
they're riding that custom ASIC wave hard.
Okay, prong one is custom silicon design. What's prong two?
Software. A massive, aggressive push into high-margin infrastructure software. The huge one was buying VMware for, what, $69 billion?
Right, VMware.
That dramatically changed their business mix. Last fiscal year, software was suddenly like 42% of their total revenue. And the market loves that hybrid hardware-software story, especially with recurring software revenue. High margins. Predictability.
Ah, okay. So if we contrast the two, TSMC is the giant manufacturer,
Yeah.
pouring billions into factories, capital intensive.
Hugely capital intensive. Fabs cost astronomical amounts.
Whereas Broadcom is more capital light,
Yeah.
a designer using its IP plus this big software arm.
Exactly. Fabulous on the chip side, plus high margin software. It's a very different financial structure.
And this leads to the weird numbers. Broadcom has much better margin percentages.
Yeah, their gross margins are up around 77%, net margins over 30%, because software and IP are high margin. But, and this is the key part of the paradox, TSMC's sheer scale means they make vastly more absolute profit.
How much more?
Well, on a trailing 12-month basis, TSMC's net income was around $49.4 billion. Broadcom's was about $12.9 billion.
Wow. So TSMC makes almost 4 times the actual profit.
Yep.
But its valuation multiple is way lower. What are the PE ratios?
Okay, so Broadcom's TTM PE ratio has been hovering around, say, 89. TSMC's, more like 25 to 28.
89 versus 28.
Yeah.
That's more than 3 times the multiple for Broadcom. How do you explain that huge gap for a company like TSMC that's so fundamental?
Well, there are a few layers to peel back. First, there's just the market narrative. Historically, investors tend to reward IP, design, software, especially recurring software revenue, more highly than capital-intensive manufacturing. Broadcom fits that favored narrative perfectly now.
Okay, narrative preference. What else?
Second, that capital intensity we talked about.
Yeah.
TSMC's enormous ongoing capex, they're projecting maybe $38 to $42 billion for next year alone.
Just staggering numbers.
They are. And Wall Street can see that as a drag on free cash flow, especially compared to Broadcom's much more asset-light model.
Okay, so narrative CapEx drag. But you mentioned a third factor earlier, the big one.
Yeah, the real elephant in the room. The single biggest factor, according to almost all our sources that's weighing down TSMC's valuation, is geopolitics.
The Taiwan situation.
Exactly. Geopolitical risk.
Okay, let's really dig into this Taiwan discount. Because for you, listening, understanding this risk is probably the key to making sense of TSMC's valuation and honestly the whole tech landscape.
It really is. The situation between Taiwan and China, it's complex, it's tense, and the hard fact is the vast, vast majority of TSMC's most advanced chip manufacturing, it's physically located in Taiwan.
Right there, and the potential crosshairs.
Which makes the entire global tech supply chain, everything from iPhones and PCs to the most advanced AI servers,
Yeah.
military tech, incredibly vulnerable. Not just to an invasion, but even just a blockade or a serious disruption.
The knock-on effects would be global,
Eh,
catastrophic. Yeah.
Absolutely. It would impact basically every aspect of modern life and the global economy. So investors look at that and, understandably, they demand a discount.
They need a lower price to compensate for that risk, even if it's low probability.
Precisely. It's a low probability but extremely high impact event.
Yeah.
So it creates this kind of ceiling on TSMC's valuation that companies based in the US or Europe just don't have to deal with. Even if analysts think a full-scale conflict is unlikely, the possibility is enough to keep that multiple compressed. It's the Taiwan discount.
So what's TSMC doing? Just sitting there hoping for the best? Or are they trying to manage this risk?
Oh no, they're definitely not just sitting there.
Yeah.
They've launched this really ambitious and very expensive strategy of global diversification, trying to de-risk their manufacturing footprint.
Like building factories elsewhere.
Exactly. The biggest move is in Arizona, in the U.S.
Yeah.
A massive $65 billion investment planned by the end of the decade, multiple fabs. Apple's already signed up as a key customer there.
Okay, Arizona. Anywhere else?
Yep. They've got a fab up and running in Kumamoto, Japan already, and they have plans for another one in Dresden, Germany, aimed more at the European auto industry.
Spreading the manufacturing geographically makes sense from a risk perspective. But there's always a but, isn't there? Does this create new problems?
It does. It's kind of a double-edged sword. Because this necessary de-risking, it actually challenges TSMC's core economic advantage, which has always been having everything super concentrated in Taiwan for maximum efficiency and learning.
Ah, so it costs more to run these fabs elsewhere.
Significantly more, it seems. Sources, including AMD's CEO Lisa Su, estimate chips made in the U.S. fabs could cost anywhere from 5% to maybe 20% more than the same chip made in Taiwan.
Wow, that's a big difference.
It is. And TSMC's own management has basically guided that this global expansion will likely drag down their overall gross margins by maybe 2 or 3 percentage points.
So solving one risk, geopolitical, introduces another. Financial risk, margin pressure.
Exactly. You trade geopolitical concentration risk for margin dilution risk. It's a tough balancing act.
Are there any other big risks we should mention besides the giant geopolitical one and the costs of diversifying?
Well, there's still some customer concentration risk. Even with the custom ASIC trend helping to broaden things out, they still rely really heavily on Apple and NVIDIA for a big chunk of revenue.
Right. If something happened to one of those relationships.
It would hurt. And the other thing is just the cyclical nature of the semiconductor market generally. AI is booming, sure,
Yeah.
but a decent part of their business is still tied to things like smartphones, PCs.
Consumer electronics, which can go up and down.
Exactly. Subject to economic downturns.
Yeah.
So it's not all just guaranteed AI growth forever.
Okay, we have covered a lot of ground here, from TSMC's incredible tech lead, their monopoly-like position, the whole arms dealer role in AI.
Right, through to the valuation paradox, the comparison with Broadcom.
And these really significant risks, the geopolitics, the cost of going global, customer concentration, market cycles. So the big question for you, listening, how do we synthesize all this? Is TSMC genuinely undervalued, or is that discount actually fair given the risks?
Well, the arguments for it being undervalued are definitely compelling. You just can't ignore the fact that they are the foundational bedrock, as some sources put it, for the entire AI revolution. They have what amounts to a functional monopoly on making the most advanced logic chips, period.
The irreplaceable toll road.
Irreplaceable toll road. Profiting from every single player in AI hardware, NVIDIA, AMD, Google, Amazon, Microsoft, OpenAI now, without having to pick winners or losers.
And financially, they're a powerhouse, despite the capex.
Absolutely. The growth is strong. Profitability is industry-leading. You mentioned the return on equity over 34%, operating margins consistently in the high 40s, low 50s% range. World-class stuff.
And analysts seem to agree.
Generally, yes. You see a lot of strong buy ratings. Price targets often suggest, 14% or more upside from current levels. People use terms like undervalued, complete steal, backbone of AI.
Okay, that's the bull case, loud and clear. But what about the bear case revisited? It's not really about them losing their tech lead, is it?
No, not really. The bear case, honestly, it almost boils down entirely to that one huge risk. The unquantifiable binary risk, as some call it, of a conflict over Taiwan.
Binary meaning. It either happens or it doesn't, but if it happens, it's catastrophic.
Pretty much. That massive, unquantifiable geopolitical risk, plus the more tangible financial drag we talked about, the margin dilution from building factories overseas, you combine those two, and it provides a pretty rational reason for the market to be cautious, right? To demand that discount.
So pulling it all together, what's the final take?
Look, the geopolitical risks are undeniable. They're real, they're significant. But they're also really well known. Everyone knows about the Taiwan risk. It's arguably been discussed to death.
So it's likely already reflected in the price, priced in.
To a large extent, you'd have to assume so. Which leads to the core investment thesis you see in many sources. The current valuation, trading at that clear discount compared to the AI ecosystem it enables. It seems to offer a pretty compelling margin of safety for a long-term investor to consider.
A margin of safety.
Yeah. The argument is basically that the market might be over-discounting that geopolitical risk, which is known, even severe, while maybe underappreciating just how strong and wide TSMC's competitive moat really is.
Yeah.
And that moat seems to be widening, not shrinking.
So it's potentially a unique chance to invest in the absolute central, indispensable manufacturing hub for what might be the defining technology of our era at a discount because of risks that are maybe already accounted for.
That's the bull thesis in a nutshell. A generational asset, perhaps, with a discount attached.
Okay. And that really wraps up our deep dive into the fascinating paradox of TSMC. We've gone through its incredible dominance, its absolutely critical role as the enabler for all things AI.
Right, the striking valuation gap compared to partners like Broadcom.
And those really crucial geopolitical factors that cast such a long shadow.
What we've really highlighted today, I think, is this fundamental tension, right? The company that forms the absolute backbone of the AI era faces this huge, unquantifiable shadow. And understanding that tension, that paradox.
Yeah.
It's not just about whether TSMC stock is a buy or sell. It's really about understanding the fragile yet incredibly powerful foundations of our entire digital future.
So here's something to leave you with, something to mull over as you think about AI and global tech going forward. What actually happens when a company so critical, it's basically a national security issue for multiple countries, is forced by geopolitics to start spreading its unmatched manufacturing power across the globe?
Yeah.
How does that deliberate, costly redistribution of the ultimate picks and shovels potentially reshape everything? Not just supply chains, but maybe the whole balance of technological power, innovation, even economic destinies across different continents. What new opportunities or maybe new challenges arise from that shift? Something to think about as this digital world just keeps on evolving.